Subsequent amendment of IT Act 1961. Now, what can happen is, let's say, for example, on day one, India entered into a treaty with a particular country. Okay, and let's look at the facts as well. So suppose on 1/4/2011, India entered into a treaty with state X, right? So you have India and you have X, right? On this particular date, let's say for a stream of income X, under the Indian Income Tax Act, this amount was taxable, right? Under the treaty, it was not taxable, right? If it is not taxable, obviously the person is going to opt for the provision of the treaty and claim that this income X should not be taxed at all. But let's talk about another stream of income, Y. Suppose this income is not taxable under the treaty, but under the Act, there is no clarity as to whether this is taxable or not, right? Now, what happened is, subsequently, there is an amendment of the IT Act which provides that the income will be taxed, okay, which was under now not chargeable under the treaty. So you provide that this income is now taxable under the Act, right? But there is no change in the treaty, right? What is going to happen is that there is no change in the treaty until 31/3/2016. So in 2011, you enter into a treaty. In 2014, there is an amendment to the IT Act, right? And in 2016, there is no change in the treaty between this period. So how does it work? For this period, if there is no change in the tax treaty, then again the same principle apply, which is that the provision of the Act or the treaty, whichever one is more beneficial, shall apply to the assessee. In this case, since the income is not taxable under the treaty, they can claim non-taxation of such income, right? If, let's say, for example, on 31/3/2016, the treaty is amended, okay, then for the period after the treaty is amended, we are going to see whether this income is also taxable under the treaty, right? If it is also taxable under the treaty, then definitely the person is liable to pay taxes in India. But if there is an amendment of the IT Act providing for taxation of income, but there is no corresponding change in the treaty, right, then the income continues to be exempt from tax.